If I ask you a very simple question, do you think government is happy with RBI, the way RBI works? Isn't a simple question? Oh, come on, you are saying this is tough. Yes, because there are various things in government, various department, various ministers, various bureaucrats, and likewise in RBI there are various department, various activities. We can't say in one line where somebody is happy and somebody is not happy, but RBI reports to Ministry of Finance and Economic Surveys, one most important document of the ministry, and here Chief Economic Advisor is appreciating the work RBI is doing. Financial system remains resilient, that is what it is writing. Gross non-performing ratio declined to 2.8% in March 24. This is a 12-year low. CRAR declined marginally. Declining is not good here, 37 BPS decline. But this decline is due to RBI mandated risk weights, which are the additional risk weight coming in the later part. Still, CRAR, capital to risk weighted ratio, is above the RBI norm. Profitability, if you see, return on equity, ROE, these two, ROE and ROA, return on asset, are two important ratio. ROE 13.8%, ROA 1.3%. You must have also seen that public sector banks are passing all the profits, dividend to the Government of India also. And stress test ratio also revealed that scheduled commercial bank would be able to comply with the minimum capital requirement under the severe stress scenario. In one paragraph, this explains very well, and this is economic survey, not an RBI document. Government of India document. RBI playing a very proactive role in this, especially managing the unsecured lending. What RBI did in this side, increased the risk weight to 125%, which was 100% earlier. In the calculation of CRAR, capital to risk weighted ratio, capital is written in the numerator and risk weighted ratio. So all the assets, say loans given, have a risk weightage. Normally it is 100%, means if 100 crore loan is given, 100 crore asset will be written. But if the risk weight is 1.25, 125%, so 100 crore loan given as an unsecured loan, in the risk weight calculation, it will be 25% more. It will be written 125 crore. So you have to provide additional 25% capital here to manage your capital to risk adequacy ratio. I think you understood this. If not, write in the comment. I will try to explain further or may make a separate video on this. Likewise, the risk weight for credit card by loans and NBFC has been fixed to 150% and 125%, which was earlier 125 and 100%, so 25% increase here also. We don't know about Government of India, but Chief Economic Advisor is definitely appreciating the work RBI has done on the strengthening of the financial system, of the banking system. Is this useful? Please like the video, subscribe to the channel. We are here to make your job preparation 50% faster.